Welcome to the Pharma Podcast, conversations with industry experts and business leaders about important and current topics in Canadian pharma, biotech, and medtech. I'm your host, Sam Tarantino. In this episode of the Pharma Podcast, we will discuss the financial resources available to Canadian life science companies facing financial hardship in the wake of the COVID-19 pandemic. My guest is Dan Juskovic, Head of Life Sciences and Health Services at RBC. Dan will offer sound advice to help life sciences companies in Canada who have been directly impacted by COVID-19 and as a result are facing financial challenges. Welcome to the podcast, Dan.
Sam, good afternoon, and thank you for having me.
Dan, let's start. From your vantage point as a banker, what impact have you seen the COVID-19 pandemic have on life science businesses in Canada?
Thanks. This is a great question to start, Sam. My view is that we have gone into an unprecedented environment, started in January of this year, as everyone's fully aware, and culminating with Government of Canada taking measures starting in mid-March. As a result, many of our clients and Canadian businesses in general have been impacted by the restrictions that the pandemic has imposed on our businesses. As a result, many of our clients have had to readjust and make a pivot with their operations on the fly, without manual, without prior experience, and had to deal with this crisis from various angles. First of all, they needed to decide on whether they could keep their doors open, how they handle their employees, how they keep the business running, and how to continue through the crisis and also post-crisis.
So Dan, what type of financial assistance is available to Canadian businesses?
Yes, thanks very much for that question, Sam. So at the Royal Bank, we've taken a very, very proactive approach in resolving some of the initial issues that our clients were facing starting in mid-March. So our first response was formulated through a program called Client Treatment Plan. It impacted both personal and business clients. And for business clients in particular, what this referred to is basically our plan to offer clients ability to defer their regular monthly payments on a variety of loans that they had with the Royal Bank as of March 1st of this year. In addition to that, we've also offered our clients ability to increase their existing operating facilities with a temporary increase up to 10% for a period of 120 days. And on top of that, we've also launched a number of measures to assist our clients with a temporary freezing or deferrals on a number of products that they have with the bank. So for example, in terms of their cash management of products, we were able to come up with solutions to waive certain setup fees for cash management services that were resulting from a COVID crisis. I'll give you a few examples, Sam. If a business client was normally going to the bank branch to deposit checks, but was no longer able to go to the bank branch to deposit checks, we've launched electronic-based solutions that could be obtained by our clients and established inside of their offices or home environments. So the initial fees or setup fees or monthly fees that were related to converting those procedures into a home office environment were covered. In addition to that, we also looked after our clients that had Visa cards. So for example, if they had to defer their monthly payments or interest payments, we set up on those Visa cards, we were able to accommodate that as well. So this was our first response to the COVID crisis. It came in at the very early stage, and many of our clients have taken advantage of that. We were able to successfully defer for majority of loans or leases of those clients that were impacted the monthly payments for up to 6 months, and made some of the increases to operating lines to accommodate them.
What about some of the government-sponsored programs like the CEBA, the Canadian Emergency Business Account, and some of the programs run through EDC and BDC, Business Development Canada?
Yes. So this was a second level of support that we've launched in collaboration with the Canadian government. In particular, I will start with CEBA, and thanks again for mentioning this one. This one was one of the most popular programs that was taken on early on. We've announced, as the Canadian government has announced the changes to this program. They've launched it very early on in mid-March, and then made a number of changes throughout the time, with the latest ones announced as of May the 19th, which is last week. So what this entails is basically Canadian business owners that were in good standing as of March 1st, ability to receive a support in the form of a senior loan to the maximum tune of $40,000 for the purpose of operating expenses coverage, such as working capital, rent, payroll, utilities, in the form of a loan that's called a credit line for small business. And the client would be any client of a Canadian bank. At RBC, obviously, would be RBC client that had a registered business as well as business deposit account as at March 1st of 2020. They would have also had to have an annual payroll reported for 2019 in the amount between $20,000 and $1.5 million. So this loan in particular was 100% government guaranteed. We were acting as the agent of the Canadian government, and we have advanced quite a few of those loans on request from our clients. In terms of the term for this facility, it would be an interest-only loan and revolving up until December 31st of this year, at which point in time we would convert this into a term facility for 5 years. So now, one thing that our clients and Canadian businesses know or need to know about this particular loan is that if they do repay this loan in full before December 31st, 2022, then a portion of this loan would be forgivable. So in other words, 25% forgiveness at this point in time. And we do understand that this is an item that is up for discussion, and it could be potentially increased in the future. I would say that as far as the price for this loan is concerned, it would be bearing 0% interest up until December 31st of 2022, and then 5% if extension is required. So that's as far as the Canadian Emergency Business Account loan is concerned.
And I believe the government of Canada has recently announced changes or expansion to the eligibility of CEBA.
Yes, that's correct. So as I mentioned before, from an eligibility perspective, it's important to note to our clients that our clients, these facilities are changing, and many of the aspects of these facilities have been kind of renegotiated along the way, so that our clients have got a little bit of an expansion. So we started with a larger amount of more of a narrow band in terms of the actual amount of payroll that they were eligible for, and so on. So some of these rules have been relaxed ever since.
Mm-hmm. What about the Canadian Emergency Wage Subsidy? Is that financed or managed through the banks?
Yes, so we don't in particular finance these facilities. However, we do play a role. And I should mention, for Canadian Emergency Wage Subsidy, the Government of Canada effectively provides eligible employers that have experienced an eligible reduction in revenue to receive that subsidy of 75% of wages for up to 12 weeks. So many of our clients have applied for it. The application is not through RBC. However, it is through RBC Government of Canada website, which we can certainly provide a link to whoever is interested. There are certain parts of this subsidy where RBC is involved, and it has to do with the actual banking platform. So if you are a client of RBC, then you have RBC Online Banking for Business. And through RBC Online Banking for Business or RBC our Express platform, you would have a direct link to enroll for the CRA direct deposit. This would probably be the best way to get the quickest, safest, and secure way to receive eligible amounts, which would be paid to you by the Canada Revenue Agency. And so should you be a client of RBC and you do have online banking, this would probably be the best way to apply for the subsidy. So there are further additional details depending on the size of an employer, of what kind of things you need to know and where to go in order to qualify for larger amounts, for example, more than 25 million, et cetera, et cetera. But certainly we are open and ready to support our clients. And I understand all our Canadian banks have established procedures to support clients who are applying for the Canadian emergency wage subsidy. Again, 75% wage subsidy to eligible clients, must have experienced a revenue decline of at least 15%, and the period of support, which is again, it's a moving target, 12 weeks of support, but then again, it could be extended.
Mm-hmm. And there's a couple programs run through EDC, right? The Business Credit Availability Program and the BDC co-lending program. Are you supporting those programs as well?
Yes, we are. So Sam, we have worked with the EDC and BDC in the past extensively through their regular conventional programs. And I always keep being reminded by my colleagues from EDC and BDC that all of our regular partnerships are still on. So if clients are not experiencing the COVID crisis in the way that some others do, and if their business is business as usual, as we do have some clients that are actually doing very well, if not well, but even better than they were before. So for those clients that are not necessarily requiring the business credit availability program, EDC and BDC still have their regular programs for financing. So it's we're open for business for all of the regular programs. However, when it comes to business credit availability program in particular, we have worked extensively with our partners from EDC and BDC. And there's been numerous iterations to these programs. And I wanted to make sure that one message is clear from our podcast is that the information that we have today is different than what we had a month ago and even a week ago, and possibly will be different than what it's going to be 2 weeks from now. So what's important is for our business client is to recognize that they need to be in a continued contact with their business advisor, like myself, or if you're a client of another Canadian financial institution, to reach out to your business advisor for the most updated details. We have examples of clients where we have started an application through a so-called BCAP program, which was originally intended for one part of the program, but we ended up funding as part of a different part of the program. So as a result, I'm suggesting and strongly encouraging business owners to speak and work very closely with their business advisors as they go through these. But let's look at them, each one of these programs in more detail. First of all, EDC Business Credit Availability Program is done through RBC, and it's in the form of a EDC guarantee to help Canadian businesses with who are impacted by COVID-19. So again, all client sizes are eligible. We would have expected that these clients of ours have been in business and are operating in good standing as of March 1st. What I mean by that is, Sam, that the clients that are generally looking for these programs are the ones that would have had no issues servicing these facilities or their existing facilities prior to COVID crisis. If the clients were in difficult situations prior to COVID and they were experiencing difficulties that were not related to COVID, then the BCAP program is probably not the best solution for them, and we may have other alternatives to assist the clients like that. But if they were an eligible client of any size, operating in good standing as of March 1st, and they were looking for support because they were impacted by COVID crisis, then we could look into these programs. So EDC in particular, purpose is really to support with funding operating expenses for the short term. Examples would be working capital, rent, payroll, utilities, margin shortfalls, interest costs, and ordinary course debt payments. The funding amounts have changed. We initially started with a certain amount, then it was increased to a certain amount of 6.25 million, and now I understand it's going to go even greater than 6.25 million. And with our partners with EDC, we're now looking at some of these programs that are offering even greater amounts. So I would say take this with a grain of salt because these amounts have fluctuated over time. So speak to your business advisor for the most up-to-date information on the amounts and eligibility. For a facility type, they would be in the form of a term loan, either a single shot or a multi-draw term to take out. And government support in this case for EDC was 80% government guaranteed, where RBC would be supporting with the other 20%. Term would be up to 5 years, and amortization would be up to 5 years. The repayment term would be that it would be interest only for the first year, and it would amortize after that for a full repayment within the amortization period. And the price, it would be standard grid pricing for RBC loans, and on top of that, there would be a EDC guarantee fee, which would be really dependent on the risk rating of the borrower, and it would be case by case.
What about the BDC, the co-lending program? How does that work?
Yes. So, Sam, big differentiator between the two, to make it very simple, is that if a client is looking to going through significant challenges as experienced through the operating expenses and so on, and there's a business disruption, if they do expect that they would be back on track within a very foreseeable shorter term, so let's say up to a year or so, then EDC program is probably best for them. And repayments of up to 5 years are warranted. However, if you see as a business owner that the impact of this pandemic is more dramatic and more prolonged on your business and your industry, then what we are suggesting is that we have a conversation about the BDC program. So if the answer to that question of the length of the time up until the business is fully back on track is perhaps longer than the initial year or so, or a couple of years, and if the terms required to amortize these loans and repay them are needed to be longer than 5 years, then the BDC program would be applicable. And this is again done in partnership with our colleagues from BDC. All client sizes are eligible. Operational expenses are included in the types of purposes permitted, such as rents, payrolls, utilities, margin shortfalls, interest costs, and so on. Maximum loan amounts, again, as we publish these resources, these amounts change on a short notice. So I would say from a co-lending perspective, up until recently, last week, amounts were up to 6.25 million. But I understand that late last week, we've come up with an increase, and the BDC colleagues are advising that these amounts could now go as high as $12.5 million. So again, take it with a grain of salt and make sure you speak to your business advisors for most up-to-date amount information. In terms of the facility type, very similar to EDC facility, it would be in the form of a term loan, 80% guaranteed by BDC, 20% guaranteed by RBC or supported by RBC. And in terms of term, up to these terms we'd be looking at, potentially somewhere up to 5 or up to 10 years, depending on the risk assessments and conversations and evaluation between our teams. They're all adjudicated through Royal Bank. So clients would go to their banker. So whoever is your business advisor, your banker, they would be adjudicating these loans directly with you. In terms of repayment, again, important to notice, Sam, that they're interest-only facilities for the first year, amortizing thereafter for a full repayment within an amortization period. And again, as far as pricing, that we have grid pricing with BDC fees built into the pricing. So we would just need to basically do an assessment, risk scoring, and see where the business lands in terms of the pricing that they would get.
Dan, what should companies do to apply for financial assistance, and what type of documentation is needed?
Thanks very much, Sam. So our clients are very well informed about through their loan agreements on the types of things that they need to do to keep in good standing when it comes to borrowing requests. So from an eligibility perspective, again, the business does not necessarily need to be an existing borrowing business. So in other words, you could potentially be a client in good standing. You've never actually borrowed from RBC, but you would like to explore this due to the crisis. So there is no particular eligibility requirement to say you would have had to had loans with your financial institution to qualify it. However, if you did, then you would not be foreign to certain loan covenants and reporting requirements that are oftentimes standard form for many businesses. For many businesses, this is a no-brainer, but and many would have had their fiscal year ends complete by December 31st or maybe March 31st. So standard is that clients would have come up with their business plans for this year. They would have obviously had to make some significant adjustments to those business plans. So certainly a written form of a business plan with a COVID-19 related actions taken to mitigate the crisis would be certainly very much welcome. In addition to that, full slate of the financial reporting, such as accounting firm prepared financial statements, if those are the ones that you're producing on a regular basis, would be something that you can start with. And more importantly, I would say, Sam, our clients would have needed or do need to come up with a very, very strong cash flow projection. And this projection would have to be sensitized against the any changes, the material changes that are happening to the business in terms of work with their suppliers, work with their customers. What we're in particular concerned with and interested in is this cash conversion cycle and how the pandemic is impacting the cash conversion cycle for every business. So I would say to prepare really well for a discussion with a banker or business advisor, they would need to really think about assessing that operational impact in terms of what's the impact on sales, accounts receivable, companies' operational plans, how they're servicing their customers, how they're closing or reducing maybe some of the segments of their operations, how they're managing their staff levels, how they're, what's happening with their payroll, how they plan to pay for the employees that are working from home. Questions around layoffs, questions around supply chain in terms of sourcing materials and so on. Then there's a whole slate of other questions around liquidity and funding, the impact on receivables collections, payroll, rent, supplier payments, and similar, and impact on other financial providers. In other words, what's happening with their operating providers, term lenders, and looking at potential payment holidays from them. Also, non-essential payments, CapEx, and so on and so on. And then, Sam, I spoke about the cash flow projection, which is a critical piece. We have actually created a version of it for our clients that do not have their own. But usually what we're looking at is basically some sort of a forward-looking view of a year to say 9 months to about 2 years of a cash flow projection, so that the clients we work very closely together with clients in assessing these and sensitizing the impact of the pandemic crisis on the cash inflows and cash outflows of the business. Those would be some of the key items that they would need to worry about, and clients would need to come prepared with for a discussion about the BCAP program loans.
So walk me through the process. What's the application process like, and what are the timelines?
So generally speaking, one of the most important things for clients to realize is that these loans, as they are agreed to today, they are unlimited in time. So in other words, there is an understanding that these are available up until September 30th of 2020. Now, will that timeline change and will it be extended? It's up for discussion, and that remains to be seen. However, it's important for our clients to know that if they are impacted by COVID or pandemic, and if they have been in good standing up until March 1st, 2020, and they are experiencing difficulties, they should not wait. They should approach their business advisors at the earliest possible opportunity and start this discussion. So with some of these items that I've just mentioned, such as business plans, fully audited financial statements, or accountant prepares financial statements, as well as cash flow projections in hand, they sit down with us and we start the process of qualifying. Usually this would take anywhere between a couple of weeks to potentially even a couple of months, depending on the complexity of a business. And what it would entail is us working very closely with the client in sensitizing the actual cash flow projections, and then assessing which one of these programs is most suitable for them. So we would work very closely with the client, work closely with our business partners from EDC and BDC to gain further understanding of the suitability, and then get those business BCAP facilities approved in advance. I would say, Sam, in a normal course of business, and this is especially important for clients that have never borrowed before from a senior lender, generally takes about 2 weeks to a month to put a application together, get it approved, get it finalized, put in place, produce the loan documentation, have it signed, and advanced. So think about this, 2 weeks to a month in a normal course of business, and now we're talking about very changed dynamics. Majority of our 85,000 employees are working from home, so impact on that has been significant in terms of some of the timelines and so on, so staffing levels and so on. So for that reason, these timelines, we should look at a little bit more extended timelines, so clients should give enough time to get those loans up and running or proposals prior to August, because if the loans are available up until September 30th, you would think that you would want those applications to be up and running before end of August.
Dan, what do you think the impact may be on these companies longer term if they are now assuming more debt?
This is a great question, Sam. So I would say, first of all, working with senior lenders like RBC, on the one side, these facilities are low risk, low return. So in other words, the amounts of interest that are charged on these loans are not as significant. You would have heard also that some of these facilities, such as SEBA, carry zero interest, but as senior loans, they don't have substantial interest rates, such as, double-digit interest rates and so on. So from a debt carry perspective, clients should not be as concerned as the significant addition to serviceability. However, with that said, there are significant impacts. Many of our industries are impacted, some of them to a greater extent than others. For example, we have assessed at the RBC level certain levels of impact based on industry sectors and subsectors. And post-COVID, we've projected where these industries in general would fall. And so now I would say impact would vary depending on where the client is in terms of their size, in terms of the subsector they're in, and so on. I could also tell you from anecdotally that some of our clients are actually doing way better today than they were pre-COVID, because the type of a subsector they were in was such that was counter-cyclical to a COVID crisis. Some others are actually experiencing significant difficulties. So I would say the impact would really depend on the industry, subsector, the business, the size of the client, and so on. But I would say this question about taking on additional debt at the time of the crisis should really be a question around making sure that the business owner have set aside sufficient cash provisions to run the business in the short term. So I would say, when you think about that, those considerations such as liquidity becomes a very important one. So it's important to keep these businesses ongoing. And so the business needs to, through this cash flow projection conversation and budgeting, start thinking about how their cash conversion cycle is going to look like, not only during the crisis, but also post-crisis, and start making appropriate adjustments and plans. So there's a lot of tools that can help along the way in terms of that, and certainly there's a lot of aspects that you need to consider. But what we as lenders look at, obviously, is servicing as one of the aspects that's important, because we would certainly want the businesses that were in good standing as of March 1st to be in good standing again after this crisis is over, and not overwhelmed with amounts of debt that need to be repaid at terms that are not acceptable. So from those perspectives, we're certainly open and ready to speak to our business owners and develop a tailored, custom, personalized plan for each of our clients so that they are comfortable with the level of debt that they could take.
Thanks, Dan. I imagine the last thing we want is to make a liquidity crisis into a solvency crisis. And thanks.
Exactly.
Yeah, Dan, thank you so much for your time and your insight during this difficult time. How can the audience connect with you?
Yes, so our clients are already well connected, but for anyone that has questions, I'm available. You can reach out to me through you, Sam, or directly through my email, dan.juskovic@rbc.com, and my last name is spelled Juskovic @rbc.com. And thank you again so much for the time and for having me on this call. I wish everyone luck and hope to speak with everyone in better times.
Thank you, Dan. Contact details for Dan are also available on our website at thepharmapodcast.ca. Thank you for listening to this edition of the Pharma Podcast. This podcast, along with a transcript of the show, can be found on our website at thepharmapodcast.ca. Thank you to our sound engineer, Errol Francis, and the town of Oakville. Please subscribe and follow me on LinkedIn to stay up to date on future podcasts. If you would like to be a guest on this podcast, or if there's a topic we should cover in future episodes, please connect with me via LinkedIn.